Morning, Mike, and thanks very much for joining Blue Notes again. Just delivered the interim result. You've described it as a good result, but it's in challenging conditions. Macro environments are not very good. Are you really happy with this result?
Oh yeah, I mean, I think it is a good result. But it's particularly pleasing because it's very well balanced, not only across the businesses but across geographies as well. And I think that that's really brings home the benefit of our strategy of the super regional bank to a situation where you do have lower growth in the world. You do have this optionality. And I think we've been able to deliver through that.
You look at the result and you look at perhaps some of the ways that people have responded to it. Australia looks very good, New Zealand is very solid, but the institutional and international bank, the Asian operations, they look like they might have been a weak point in there, but is that the case?
No, Asia was very strong. I mean, it grew at 18%. The weakness, if there was one, was in the institutional business in Australia, where we've had very significant margin compression. But frankly, that's something that we'd expected. Had we not had the Asian business, we would have been in serious trouble. So I think it's, despite those headwinds, they've done a pretty good job.
With the Australian and New Zealand result, housing is very strong. And again, that's something that people are starting to become sensitive about, both domestically and offshore. Do you see the emphasis perhaps on the housing market as a potential challenge, or are you happy with how that's developing?
We in Australia have got the lowest mortgage book of the four major banks. And of course, we've been trying to build market share there over the last 5 years, which we've done very successfully. I'm very comfortable with our underwriting criteria in terms of the credit standards that we impose. There is no doubt we are more conservative, we're more prudent than many other players in the market, and I feel there's still a real business opportunity. I do think we need to watch the housing market. I think there is I would say a little bit too much heat in certain segments, but particularly in parts of Sydney, perhaps parts of Melbourne. But you can't look at it holistically in Australia and say that there is a problem with the housing market. I think it's something that just needs to be watched.
Is there a problem with the heat in the investor component of that market?
Well, that's been one of the fastest growing areas, but of course that that really plays to a very low interest rate environment, and of course the tax structure.
You made a commitment a couple of years ago that the return on equity target would be 16%.
Yeah.
Dropped back a bit in basis point terms with this result. Is that still achievable, 16%? Is it still a target?
Well, I think it's important. When you set a target, you should try and aspire to it. I think if you look at actually what has happened since we created that target, we've had the movement in foreign exchange, which has probably taken 50 basis points off that ROE. And of course, another possibly 1% with the D-SIFI charge that was imposed on us to hold more capital by APRA. So had those two things not happened, we'd probably already be there.
You touched there on capital. Obviously, that is a constantly changing story. The latest view from the regulators perhaps is even more capital going forward. Capital is now at the front of everyone's mind. Are you comfortable with how the capital position is at the bank at the moment?
Oh yes, I think in terms of where we sit, we've got sufficient capital. There is no doubt that there will be a growing need for more capital. I mean, the regulatory environment is such that that more capital is a given. The question is how much and by when. And I think that the options open to us as a bank in terms of raising additional capital purely through the DRP, whether or not you put a discount on that. There are a number of divestments that we're looking to make. That's no secret. We've businesses that are not core to strategy. We are looking to sell. and some of those will happen during the year.
You touched there on some of the businesses not core to the strategy. We've seen now the announcement around the ANZ business. What ongoing implication will the sale of that business have for ANZ?
Well, it's not a huge implication because we're looking at the dealer finance part of that. The piece that's within the commercial bank will remain. So it's a small part of that business.
The environment going forward, macroeconomic across the globe and even in Australia and New Zealand, still challenging conditions. Were there parts of this result where you've got to focus on improving and parts where you think the bank will get returns, coming forward?
Yeah, I think there's no doubt that we have to quicken or speed up our execution, particularly in IIB. I think that looking at balancing the return over growth is very, very important. It's something that we are very, very aware of and have been working hard at. But I think in a low growth world, the issue facing all banks is going to be revenue growth. And that's an international problem. That's not just an Australian bank problem. That's every bank in the world is going to face issues from revenue growth. And therefore the return on your business is going to become increasingly important. I think that the progress we've made in terms of operational efficiency and improving the return through what has been very significant efficiency. For example, costs in operations went down 3% on the half, yet volumes went up 7%. There has to be more of that. That has to continue.
So operational efficiency, obviously one area then that you are happy with. Would there be other particular parts of this result that were surprisingly good or good from your perspective?
I think it was a great result across the board. I think when you consider the Australian business has outperformed anybody else in terms of their business. The New Zealand business is now best in class, I think, in New Zealand. IIB has done incredibly well when you consider some of the global headwinds that they've been facing. They've actually managed to replace the earnings from those headwinds and some. So it's been a great result. As we said, the global operations and technology have really done well. So I think it's a great result, and wealth as well. I mean, I shouldn't forget wealth because they've also had a good result.
Thanks very much again for your time with Blue Notes.
Thanks a lot, Andrew.